Let's go to YouTube. I gotta put on live chat. And then we're gonna go over to YouTube Studios. There is the email, so I'll put on Do Not Disturb, and then we're gonna go to Content and Live. It's gonna be a quick one today. Well, it'll still be an hour. Who am I kidding? Okay, we're going to take that down. And we're going to go to a default workspace. We're going to do some scans. Scans. Morning, Chris. Brokerage holdings. Cat has a, I mean, this one just, it's been a monster. Oof. Morning, John. Covered call ETFs. Ooh, a lot of them. XYLD. NUSI, QILD, RYLD. I have to do Bitcoin. I have stuff to do the Bitcoin. Maybe I'll do that while I'm in New Jersey. Energy. LAC. Levered ETFs. Bulls. BULZ, which is what? The FANG innovation. Low cost Vanguard. Morning, Steph. I'm low energy, Gary, today. I didn't sleep well, so VB. Let's look at spider sectors. Any sectors that yesterday's sector sucked. Let's see about. Okay, Okta. Okta before earnings. It's a messy chart. AbbVie. Morning, Daniel. Fubo, Mara, ServiceNow, Oracle. I don't like Upstart. I do like SOFI though. Ring Central. No, that one. Dear Twilio. We've flattened out on Twilio. This is the cybersecurity from Israel and Adobe. We're going to put Adobe in there because Adobe's a good one. Adobe just got dinged with Sonos, whatever that OpenAI generator is. Alpha is doing really well. Elf is doing really, really well. Take two. Monster. Before earnings. And Adobe we already have. Let's look at, I have Elf on, just so you know, I do have Elf on my notes. So I'm not ignoring you, Steph. I just know I'm going to talk about it. So, Cat, AbbVie, Deer, Oracle. Okay, everything's scans are done. Let's go to the 4 hour, and then we can go to Adobe. See, get a nice little entry there. Elf is up 1.5%. Okay, I'm gonna be right back. See when you get back. Let me know if there's anything I can do. Okay. We're going to go to the Qs. QQQ. I mean, we're just floundering. Morning, Nevin. Okay, I'm going to hit, let me get to here. And YouTube. Home, live. Why is 227 not showing up? I've got to quit YouTube. Let's see. Do I show up as live to myself? Nope. Wow. Huh. I guess I don't see view channel. There we go. 227. And I get to skip the ad. Daddy gets paid. Skip. Okay. Larry. Okay. Let's see. I'm going to open up all the links. There's one. That's on Super Micro. That's one. This was a good one. Lost 2 fees. That's one that should have yes. Okay. That's a good one. We should have SoundHound. We're going to go over that one. We're going to look at that, which is, yep, investing versus speculation. We're going to look at that. We're going to look at App 11. We're going to look at Zscaler and CrowdStrike, Devon and Copang. My girlfriend now does that when she's sitting there working. MPLX is strong buy, just so you know. This was an interesting one. SMCI, we've gone over that one. Whether it's in that chart territory or not. Google got absolutely hammered. AMR, which is a coal seems to be back. So keep an eye on coal. Mike Santoli has a mystery broker who he's never revealed who it is, but it's a great thread you can read on my my Twitter. There is the Pelosi Palo Alto purchase, just so you know. There is the load up degenerates. And here is Ryan Dietrich. So, long term. Dietrich was on the Compound podcast that I listened to this weekend. He was good. Okay. Okay. I am going to start recording. Good morning. It is Tuesday, February 27th. It's low energy Gary today. Don't have too much kind of, here. I am traveling today, so I'm going to make this one pretty short. Make sure you are signed up for the newsletter. Whether it's free, whether it's paid, just make sure you're signed up for the newsletter in the next 2 days. If you get anything from me for the next 2 days, it will be a gift. It's not something that I'm planning on doing, but it will probably not be the normal podcast that I'm going to do. It will probably just be a regular audio or a video of just me saying stuff. So make sure you're on the newsletter. I'll try and put out a newsletter, but it is my mother's birthday, so make sure that you're there. If you want any of the stuff that you see, TrendSpider, Seeking Alpha Premium, Alpha Picks, I went over it yesterday. In yesterday's newsletter, I outlined who should be, which tool is for who. And here's the link tree. So just read yesterday's newsletter. You got TrendSpider, Seeking Alpha Premium, Alpha Picks. All of my links save you money. Webull, I think it's the best app. You can get it free, and you download, fund an account, you get free stocks. Simple as that. So let's look at the Qs real quick. The Qs, we're kind of just hovering around here. We've got this gap down to 426 that we set last week. Where we gapped up with NVIDIA earnings. There's nothing going on. I mean, it just hasn't moved. You got some data today, still hasn't moved. I mean, stuff seems to be okay. Nothing's really doing anything. We got past the NVIDIA earnings, so you're just kind of sitting there. That's it. Here's very interesting. Pretty sure Fundstrat already ran similar numbers. Just need to wait patiently for Tom, Ken, and Marks. Dietrich, if you haven't listened, Dietrich is on the most recent Compound with Josh Brown podcast. When the S&P is higher in both January and February, and we will close out February higher, the next 12 months have been higher 27 out of 28 times since 1950. The average return is 14.8%. Do not be afraid to buy at highs. This is telling you do not be afraid to buy at highs. Doesn't mean that you're going to make money overnight. Just means, hey, more than likely, 27 out of 28 times, if you had done it in the past, you made money. That's all the algorithm is back testing this kind of stuff. The 4-hour algorithm that I have in TrendSpider. That's all it is back testing stuff. Your best predictor of the future is the past. So, Kramer last night went over NVIDIA and how it's going to be a $2 trillion company, how it could take over Apple. This guy is the kiss of death. I'm not saying that NVIDIA is going down. I'm not saying that NVIDIA is but last night he went on it. In pre-market, you're at 788. Again, I said 3 days. This has done nothing either. And if we look at it, if we just pull back here to the last time the algorithm got you in, because the algorithm, you're still in at 515. The volume shelf is building up, hasn't built up as much as down here below the where the gap started, hasn't built up as much as here where you had some capitulation for a few days, but it's capitulating and it's building up. So I think you get this under $800. I think you get it, you put it in an account that you don't necessarily look at, and then a year from now, you take a look at it and it's at $1,000. I mean, that's the way you look at it. But Kramer, kiss of death. I mean, that MACD is just soaring up. It's way too high. The RSI is at 66. This thing's coming off of 70s. But here, it got to 84. I mean, that was on February 5th. It got to 84. It was trading at, 690. It had just broken 7. Don't you wish you would have gotten it at 700 instead of 800? Again, don't try and time this one, but I did want to bring up, he went heavy on NVIDIA last night. I didn't like it. It made me feel uncomfortable. Pelosi. Pelosi loaded up on Palo Alto Networks. So she bought $200 strike expiring January 2025. I don't know what this means. I don't know what a $200 strike on a $318, it's a year out, so it's next year. But she did this, and you can read about this and the details of this in this Seeking Alpha article. She did this while Congress was in session. Now, she's not actually trading it. It's her husband and other people that are actually trading it. She's just probably directing them as to what to buy. And guess what day this was? This was the day when they got the alert that Russia may have some nuclear capability out in space. You should have gotten it under 300. It's at 318. It's up another 5%. Should have bought more under 300. Yes, it was a ding. But you still have a gap up here to 365. Buy it at 318. That's what it's trading for now. If I didn't have a position in this, the algorithm has you out. Doesn't have you in. Remember, the algorithm plays in that little middle space. But yeah, 2 weeks ago, the Congress got a briefing on a serious national security threat. It's rumored to be that Russia has nuclear weapons that are in space that are able to take out stuff. That same week, Pelosi bought $1 million of cybersecurity company Palo Alto Networks. That's crazy. I mean, that's just crazy that we have the people elected that have the ability to do that type of thing. It's not illegal, completely legal. You can hate her, but vote people in who want term limits. Vote people in who want my two senators, Oswald and Warnock. They both have bills on the floor to make it illegal for anybody sitting member of Congress to actually own stocks. They can only own ETFs, just like the CNBC anchors. I don't have a problem with these guys owning some type of sector or stuff like Josh Gottlieb. I went down a rabbit hole yesterday, and a rabbit hole led me to Josh Gottlieb has like $283 million in investments. Dude is 47 years old. Has been in Congress like 8 years. How do you get that kind of money to be able to invest? And he's one of the leading stock pickers. Yeah. I mean, there's so many grifters on both sides of the aisle. So don't look at Pelosi as breaking the law. Don't look at her as being a single outlier. She is just the face of this, but it's systemic across the board. Dean Phillips for president next year. He's the guy I'm backing. But Palo Alto, it surged. It's still surging. If you haven't followed Mike Santoli, he's got this. He's got a backdoor to a mystery broker. And this thread is something you should absolutely 100% read. The mystery broker had an update yesterday. He's feeling very, very nervous about buying anything at these levels. You've got, my mother called me yesterday and she's like, Jamie Dimon sold his. Jeff Bezos sold his. Mark Zuckerberg sold his. Should I sell everything? And do they know something? No, nobody knows anything. There's not some conspiracy deep state that's manipulating the stock market that's going to cause World War III. But you have to be aware of these things. And the mystery broker plays it out perfectly. This thread is absolutely a must read. Sign up for the newsletter. I'll have the link in the newsletter. But you can go and look at Mike Santoli as well. ELF went kind of crazy yesterday. Let's look at ELF. It's up, up almost 10% yesterday. We'll look at the chart. There was no news. It was up 10%. In my mind, this stock, it's trading in pre-market at, 201.92. Get it under 200. It is expensive. This is a super expensive stock. Make no bones about it. A 56 forward PE on projected earnings means they're going to have to blow it away again. Every year, every earnings release, though, they do blow it away. So just understand, you're going to pay for this one. If you want to be in the beauty sector, this is the growth one that you should have. Now, I own Ulta. The reason I own Ulta is because they got dinged down. And I didn't time this correctly. I timed it where I probably bought it back here in July at its high at 478. But I'm doing really well in it now. So you can't time a lot of this stuff. The reason I have Ulta is just because ELF is expensive. So pick your, when you go, if you're in a video game and you've got your choice of characters, some people choose the karate guy. Some people choose the ultimate fighting dude. Some people choose the guy with the most weapons. It's all about trying to find your own comfort level. That's what it is. Don't think that I'm downing Elf. I've missed out on this run. I'm not upset. I still have exposure to the beauty category. And I believe I have Elf in some type of ETF. I'm pretty well diversified with it as far as ETFs goes. But Elf, yeah, I know a lot of people in the audience have it. The chart, to me, still looks strong. I mean, you still got confirmation up there. The MACD isn't super high. The only problem is the RSI is at 79. I mean, again, that doesn't mean a whole hell of a lot because the stock still, seems to go higher. It's a solid company. So Elf, mystery broker, yeah. Alpha Medical Resources. I saw this one and I thought it was interesting because energy has been left behind. But this one is it's a coal company. They blew away earnings. It is up, let's see, 2.64%. Yesterday, they made, look at this, $6.65 per share in November. They made $13.05. They gapped up, huge gap up. You went from 385, where the algorithm got you in, and you're at 440. I mean, that's 14% in a coal company. You can read about how they did it well here in Seeking Alpha. I don't know anything about this company. I saw it up 13% and that it was in the energy sector, and I said, holy crap. Again, Seeking Alpha leads you down rabbit holes. It's ranked 13 of the 28 companies in materials. And if you're interested in materials, this is, these are steel stocks. This is, they do coal. I don't know why they're 13, but it's resources. Sometimes Seeking Alpha. Ramaco, METC is the top one. I don't recognize any of these names. Oh, I recognize Vail. I recognize Vail. But again, I don't know anything about this stuff. You can get down a rabbit hole. Google got hammered. So here's my take on Google, and I'll kind of go over the grade 8 afterwards. I have a feeling Google will be going through, and if you didn't know, they pulled Gemini. They pulled the image generator Gemini, and I think, in my mind, this could be a value trap at 137. But Google just got killed, and remember, we buy GOOG because GOOG is what they buy on the buybacks. You're sitting at the 200-day. The algorithm has you out. The RSI is at 30. I don't want you to get into Google. I just don't want you to get into Google just yet. The reason is they have some systemic problems. We talk about good companies with good products, with good earnings, and good management. The management has been called into question on Google. And I don't want to say that, hey, this is going to go down below 100 again. It could. They do have that exposure to the ad business, which, Microsoft with OpenAI, Apple with some of their AI plays, they could dig into this search revenue that Alphabet has been hiding. If you look at AI, some of the AI stuff, I know it starts with a P, but I don't know the one. I mean, Gemini was what I was using. I'm currently looking at other ones. I use ChatGPT as well. But Gemini was what I was using. Now I'm starting to not trust it. And that's the danger you have, is that I'm starting to think that it's manipulated a little bit more than I would like. And it may not be giving me the answers that I actually am looking for. So in my mind, what do they have to do? I think Google could be in for a Twitter style shakeup or a Meta style. Remember, what did Elon Musk do when he got to Twitter? He fired or let go 85% of the staff. What did Mark Zuckerberg do when he realized, hey, we're spending a lot of money? He cut staff. They cut costs. Google is a bloated company. We know that. They invest in things that typically don't make money. They've tightened a little bit. They need to tighten more. And I think this Gemini pullback, there's two things. They were criticized for not going fast enough and letting ChatGPT get out ahead in OpenAI. They then went too fast with Gemini. So you can't win. You're going to get criticized on both sides. But the next move for Sundar Pichai is going to be key. And read about it. Read about it in this, more on Alphabet. You can read about things, but understand, I think Google, in my mind, is one that I would kind of wait on. The algorithm doesn't have you in, it has you out. I'm planning on probably trimming on the next one, but I do think it's going to be a little bit of a wait and see game. Apple, on the other hand, Apple has done nothing. Apple has done nothing in this bull market. It's done nothing but pull you down. Am I getting out of Apple? Absolutely not. I think Apple is sitting back and waiting. I think from a long-term standpoint, they will have the resources, they will have the AI, they have the ecosystem. And so I think they're never first to market. And so they're getting dinged on not being first to market in this. I do think the iPhone 16 probably is a cycle mover where they implement some type of AI. You need more memory in your phone to run AI. I think they enhance Siri. I think they do incredible things. I am holding on to Apple. I am not selling it, even though it's down, even though I do think that it could come down into the 170s. In pre-market, you're at 181. But I'm not moving it. Amazon, on the other hand, moving to all-time highs. I've talked about it a lot. And this is the grade 8. Amazon's going to get back to all-time highs. And you still have, 10%? Let's see. Let's update this one a little bit. Because we've got 176 to 188. You got about 7%. They're going to get to all-time highs. You look at that rocket ship. It's currently on. It's doing really well. We talked about Google. Let's talk about Meta. Meta is incredibly expensive right now. Meta, you could buy it and be perfectly happy, buying it a year from now, but the forward PE is 20. Do you want a forward PE of 20 when you potentially have some regulation coming in the EU, when you potentially have a screw up in the election, when you potentially don't have the protection of that congressional law? Yeah. I don't know that I necessarily want to get into this one right here. If you don't have a position in Meta, I would suggest getting an ETF that is largely in Meta. I would suggest trying to find an ETF like that. You can buy the Qs. You can buy XLK. You can buy a bunch of them. But I would suggest doing that. If you are in Meta, just sit there and hold it. There's no reason to get out of it. This gap isn't going to get filled. You may come down here to about 430, but I think 480 is putting in a nice shelf there. Microsoft has OpenAI. I think anything around $400 is a steal in this. We had a couple of days ago, last Friday, it looks like 410. You can buy it at 406 today. It's a good buy. I don't think that Microsoft has any problems here. NVIDIA, just buy it. It's at 790. Get it under 800. That's it. Netflix, get it under 600 because this one's going to 700. 594 right now. Get it under 600. You should have a position in that. Tesla, I bought a Tesla. Fantastic experience. The problem that you have is that nobody in this country other than Tesla is going to do an EV. And do you want to does the vast majority of Americans want an EV? I don't know. I would wait. The note that I have, pause on buying this until the end of the month. When they announce their end of month deliveries here in February, I think you'll get a good sense of the demand. And that's what you want to see. There are a ton of inventory cars right now. Now, they get rid of them at the end of March, at the end of the quarter. They do typical sales and stuff. I just sit there and wait. So there's your grade 8. I mean, that's essentially the grade 8. That's my take on it. I don't think there's any, oh my God, I've got to run out there and buy it. But I do think for the long term, I think you're setting yourself up well for the long term. Mara is up, 10% in pre-market? It is up 8.94%. It is over 30. So on weakness, I want you to set your stop losses. We don't sell it right now. It's at 31.80. It is up in pre-market. You're seeing a MACD cross here. Don't you wish you were in at 16 with the algorithm? You're crazy if you're not getting TrendSpider with the algorithms. Use my link tree, sign up, then email me, and you get this algorithm. Look at this. This alone would have paid for, a couple $100. Put $400 in there. you pretty much paid for your yearly TrendSpider, $500. You're up 78% currently. That's just with the closing price yesterday. If we move this up to where we are now, which is, let's see, in pre-market, you are at, let me see. Pre-market, you are at 3177. So let's move this to 3177. We will move this to 3177. I don't want to get it wrong. I don't want to overemphasize this. You're up 88% in this run. I mean, 88%. Why are you not getting the algorithm? Now, the algorithm in Mara alone, you make 154% over 24 months with 30 positions. Your average win, 54%. 30 positions. So you're telling me over 24 months, you don't have time to make 30 trades? Just over one a month? God, come on. So coin was up. I mean, Bitcoin's flying. You need exposure to Bitcoin. Have exposure. I have Mara. I have some ETFs. I just have exposure to Bitcoin. I do not own Bitcoin outright. I do suggest if you want to get Bitcoin, just buy Bitcoin outright. Coinbase is up. It's over 200. It's up 6% at 206. Boy, don't you wish you would have bought it at the algorithm and just kind of forgotten about it? Find the entry point. And now you've broken through this double top. I mean, that's the great thing is you've broken through this double top. Like I said, you've got this double top. Now you've broken through it. Now old resistance becomes new support. MicroStrategy, up. Way. I mean, they announced that they got a bunch of new Bitcoins at a fair price. This one's up 10%. GBTC, this is the leading Bitcoin ETF. This one is, let's say it's up 4%. I mean, look at GBTC if you were to just use the algorithm on GBTC. You're at 50 now. So let's say 35% over just about 30 days. GBTC, you make 117%. If you just bought and held it 24 months ago, you made 78%. So again, understand you need exposure to this stuff. SOFI's moving. SOFI has a crossover. Started moving towards 10. If you're in the algo, you bought it 819. Again, if you're not using the algo, the average win on this one is 12%. I'm not sure why you don't sign up for TrendSpider. But yeah, it's moving again. Let's see. Right now, I think you have about a couple of percentage points, 5%. Nice 5% move over what, 18 days? In pre-market, you're up 2.3%. You're at $8.74. So let's move this to $8.74. Again, if you're not in TrendSpider, I don't know why. I mean, again, it takes emotions out of the trade. If you like this stuff, you can do it. Let's look at SMCI, because SMCI, we talked about TrendSpider saying, hey, there's this valuation from this doctor who studied it. Here's your smart money, gets in. Institutional investors get in. The public then gets in. But you get enthusiasm, greed, delusion, new paradigm. Then you pull back. And then you get a nice bounce up. And then you pull back again to the mean line. Now, the mean line on SMCI, probably about 300, 350. Do you move back there? I don't think that valuation does that. But you could get back to 700. Now, SMCI is in the core portfolio. It's down 1.58%. I've suggested maybe trying to day trade it on a 5-minute chart. It does have that type of volatility to it. So might be something that you want to look at. If you want to learn how to day trade on a 5-minute chart, I did do a paid newsletter this weekend that outlines it. In the education section, you have everything you need to see. Everything that I know about day trade. I don't do a lot of day trading, but you can use all of these patterns and things that I go over in all of this 6-part series to understand exactly how to trade. So if you're not signed up for the paid newsletter, I don't know why. I am going to do a live trading session probably next week sometime. I'm going to test it out over this weekend. I'm leaning towards Zoom. To give you guys the ability to interact, I'm leaning towards Zoom. That's where I'm going. Okay, hold on one second. Where was I? It was on SMCI. Yeah, SMCI. VKT. Let me see. The symbol is VKTX. This is Viking Therapeutics. Just Google it. It's crazy. It is up. It was up. It's up 80%. I think it was up as much as 140% in pre-market. They just announced their GLP-1 drug shows promise. This is the type of hype that you're going to get. This is why Eli Lilly, they have a first mover advantage. They're down 2.4% today, probably on some news just based on, hey, they're going to have competition. That's what it is. But VKTX, crazy. It's got volatility. So if you'd like to trade it, go and trade it. Remember, for anything that you're going to trade, you want volatility. Now, one that came up in the in my morning email is MPLX. So I get from Seeking Alpha, if you do sign up for the premium version, you get a morning, you import your portfolio. It's great because it keeps you on top of all the news, everything. MPLX in Seeking Alpha, let's go to Seeking Alpha and I'll show you. Because it moved from a hold to a strong buy. And this is energy. And the energy sector has not been loved. But the quant moved it to a strong buy. They topped Q4 estimates. This one is up 0.28%. I think you get it under 40. I think it moves to 40. The yield on the dividend is 8.64%. So look at this stock. Over 1 year, you're up 12%. But that doesn't include getting an 8.64% dividend yield. This is the kind of stock that you want to buy. This is the kind of stock that you look at in the energy sector and you say, yes, this is the one that I want. Energy Transfer, solid. The CEO's buying it. MPLX, I like this one. I own this one and I've owned it for a long time. Let's look at some earnings. Zoom announced earnings. And Zoom it rose more than 11%. They blew it out of the water. I kind of said it yesterday. I'm not sure about this company. The more I sit there and look at it, though, the more I actually like this. And I tell you why. I think they're definitely a takeover target. But the more I like this stock is to trade around earnings. Every time they have earnings, they have gone down beforehand, and then they blow it out of the water. I mean, look at these the three last earnings periods. So you're going to open up at about $68, which is right around here, which there's a volume shelf at. If we just pull this back, we're going to pull this back. Let's say we're going to pull it back to, let's pull it back to the highs here. 2 earnings ago. We'll pull it back here because I want to see where people are holding this. You can see at $68, 68.30, which is where it's at right now. Pretty decent volume shelf. You're up above that 200-day. The 50-day still moving negative. You filled this gap. So technically, I think it's, again, Zoom, if you want to read about their actual earnings, they've beaten their earnings each time. So I think it's interesting. This is Zoom in charts. Enterprise revenue climbs 5%. Look at the total revenue. It's going up. Look at the enterprise revenue going up. Look at the number of customers going up. Online average monthly churn going down. Remember, churn is losing customers. That's still a big monthly churn. It's not crazy expensive, from a valuation standpoint, because this forward PE is only 12. So they're guiding with a forward PE of 12. The problem is that this company doesn't, they're going to need to integrate with some other things to keep customers. So I like it. I don't love it, but God, that was a great earnings call. Tomorrow after the bell, let's see. We have CRM, Snowflake, and Okta. Okta's an alpha pick, and if you're not subscribed to alpha picks, you probably should, because the reasons and the analysis are really, really good. So if you're new to investing, what you should do is go and check out AlphaPix. It's the third link on here on the link tree. Okay, just check the price out. I think 400. I save you $50, $449. But here's what it is. AlphaPix returns over since July 1st, 2022. The S&P's up 32%. Since then, AlphaPix is up 105%. They blow it away. Okta is one of their picks. Ironically, algorithm got you in at 86. I do think that this one is a little bit of a roll of the dice. It's a little bit scary to see how much it's run up into these earnings. If we look at a long-term chart, it's got this range. And so I'm concerned that you're at the top of this range until you get out of this range. You can see all-time highs. We're at 256. If you go and look at Okta here, Okta, forward PE of 43. They're not making money. Is this the time when they actually make money? Let's go over to Seeking Alpha. Let's see what the quant says about Okta. Because I do think that this is one that you may want to look at getting into. It is in that range, and while I identified that range as the trading range, this could be, it's a strong buy in the quant. The valuation's the only thing. So it's number 2 out of 24 in its sector of internet infrastructure. Couchbase is number 1. So take a look at Okta. Another one, Snowflake. I've said, hey, buy Snowflake between 150 and 200. It took off. It's at $230 right now, up 1%. You have Snowflake tomorrow after the bell. And the big one this week, and by the way, this is hold. It's all based on valuation. I do think that I hold Snowflake. I bought it about 150, 180, 190. I meant to sell it over 200. It's just been too strong to sell. Salesforce. This one, they report after the bell tomorrow. Strong. I mean, look at that. 1 year, you're up 84%. It's number 1 in their industry. So buy the leaders. Today, you have Devon and Coupang. Devon is an energy name that I currently own. I took it out of the core portfolio. I don't like this one going into earnings. I'm not thinking that you're going to get 10%. I'm not thinking you're going to get 30%. I think if you're lucky, this one gets back to 45. It's just not a good stock. Coupang, on the other hand, CPNG. I think this is software. I'd have to look it up. I believe it's software. Yeah, consumer discretionary, broadline retail. Oh, this is the no, this isn't software. This is the e-commerce business in South Korea. Coupang is interesting. Again, the quant has it as a hold. You can see going into this earnings period, it's run up a little bit, not back to its all-time highs. It's expensive. Forward PE is 67, but this is one that could run on hype. If there's anything, it could run on hype. One that I do like going into earnings, and I'll take a look at these two. Zscaler. This is Palo Alto Networks. It's cybersecurity. Zscaler stock has rallied 78% since June of 2023. This analyst in particular downgrades it from a buy to a hold. Quant has it as a strong buy. Zscaler, for me, I think if you're not in cybersecurity, Zscaler is not a bad play. The problem that you have is you have run up into this earnings. Now, the Palo Alto earnings took it all the way down to 205. Boy, don't you wish you would have bought there? Algorithm got you out, hasn't gotten you back in. The MACD is well low below here. The problem that you have is this stock going to continue to run? Is it too expensive? Is it going to continue to run? That's the issue that you have. If they have an earnings like Palo Alto Networks, and remember, Palo Alto was just singled out. Their problem was they were turning from more of a subscription business, and there was question about demand. And so I don't think that Zscaler is in that same situation. Year to date, they're up 10%. Average target price, 255. You're trading at 241. If we go and we look at Zscaler, and we just look, the quant has it as a strong buy. I like this one, and I like it going into earnings. Likely report strong Q2 with guidance inside. So could you get 10% on this? I don't know. I mean, if they just guide kind of the same, I don't think you get 10%. But if they blow it out of the water, again, this guy says too risky before earnings. And this is the guy that I'll include in the newsletter. The other one that you want to look at is CrowdStrike. CrowdStrike reports next week. They've got a hold in the quant, but it's A. The only thing is the valuation. That's it. That's it. But CrowdStrike, in my mind, it's one of the top ones. I've wanted to get into this. I sold out at, I think, 250, and I missed this run. Completely missed this run. But this is one that I absolutely want to get into. Its forward PE of 108 is crazy. If they guide higher, that's your issue. You're not going to get a chance to get into it. So between those two, I think I really like CrowdStrike and I like Zscaler. But I do own a bunch of Palo Alto networks already. And you can't argue. Nancy Pelosi's in Palo Alto. AppLovin. Recent earnings report, why growth investors should take notice. This is a stock that just continues to go. And I think it's in the alpha picks. I think it is. This is just a stock that, it's broken out of its range. I identified this range. It's broken out of it with its earnings at 58. I mean, do you want to buy it here? MACD's a little high. I'd probably wait for it to pull back a little bit, maybe towards the $55 range. But I think that's one that you may want to look at. There was this primary. This is an Instagram post, and I thought it was interesting. What's the difference between investing and speculating? Investing is the act of buying, holding assets such as stocks, bonds, ETFs, blah blah blah. Final price. Investors try to generate an income or profit on the capital by taking an average or below average amount of risk. It's risk. What's speculating? Act of putting money into financial endeavors with a high probability of failure. Speculators seek to make abnormally high returns from bets that can go one way or the other and often utilize. I often talk about when I get to these social requests, it's all speculating. You guys all want to know what I know about what I like about the speculating. Do your research and understand that you should be investing with 90% of your portfolio. 90% of your portfolio should be in investing. You should not be speculating with like 50% of your portfolio. It's too risky. If you're younger, you should be more on the riskier side. So speculating with maybe 30% of your portfolio might be wise. But understand, you should not, if you have $100 in the bank, you should not be YOLOing earnings. You need to learn the art of investing. That is what will make you money. Tyler from Spotify. Let's go to Seeking Alpha. I'm going to look this one up. Fantastic podcast. Been listening for almost a year. Can you look at Blaze? It's a cloud storage company. I'm in the green, but wondering if you think it still has room to grow. Let's see, Blaze. If you're in the green, kudos. Seeking Alpha analyst, sell. Wall Street has a strong buy. It's kind of, mix. Ranked 6 out of 24 in the industry. Okta is up there higher. Snowflake is up there higher. Let's look at the valuation real quick. Well, let me go back to why the Wall Street analysts that want it as a strong buy. Let's see. There are 7 analysts in the last 90 days that have covered it. 5 say strong buy, 2 buy. There's nobody saying sell it. You have a $13 price target on it. Which represents a 35% upside. Now, the stock, you can see, we've been bringing that target price down, and they've just recently gotten up on it. So I don't know what recent news they've had. The quant rating has been a hold for quite a while. I mean, it's been a hold even as the stock price has gone up. Let's look at BLZE here and see what they say. It's not making money. It's up 30% year to date. It's run quite a bit. Short, nothing crazy. Average price target 13. So you do have that upside. Same kind of thing. December 2021. This is where the price target comes in. This is why, nobody's covered since 2021. So you want to take a look at that. Insiders, they're all selling. They're selling fairly big amounts. I mean, for this market cap, that's a fairly big amount. That's a lot. So I'd be a little bit careful of it. If we look at the chart, I would trade this on the chart. If you're in the green on this one, Tyler, and you've held it for a while, maybe hold it for a year. I don't know what you like about it. Algorithm, it's gonna get you out. It's gonna get you out soon. It's capitulating around here, around 9. You have a volume shelf here around 9. If you get below there, it's around 923. So in my mind, you've had your earnings. You've gapped up. You had the hype. You should have sold it up here at 11. I'd probably get out. Be honest with you, I'd get out. I mean, you're underneath the 9-day there. If this is an investment, don't get out. If this is a trade, get out. That's my advice for you. Brady, any chance you could take a look at Sentinel One? I've been hearing and seeing a lot of things on social media and different podcasts. I listened to Sentinel One. Let's see. What is Sentinel One? You didn't give me the... Come on, Brady, you didn't give me one. I don't... Oh, well, not Sensual One. Sentinel One. Let's see. I don't see it. So, I don't see it the way you spelled it. So, no, can't look at it, Brady. You got to give me the symbol. D-Drum, hi, thanks in advance for your help. What do you think of, let me see, XPEV is one that, XPEV. XPEV, I mean, it's a Chinese car company. You can invest in it. It's not making money. I mean, Quan says sell. Do I like it? No. I don't. I mean, honest to God, I just don't. So I'm not even going to look at the chart. Trade it. TRSPX is the other one. But and James Breach, great comment. He says, my new favorite drinking game is every time Gary says, I'm not even going to look at the chart. Yeah, I'm not going to look at that XPEV chart. It's a crappy company. And TRSPX, this is an S&P index retirement fund. I mean, I don't know. I'd rather have VOO. This is probably in your 401k. It's not something, if you're stuck in certain things, this is just an S&P index retirement fund. It's tracking the S&P. You can look at the holdings. It probably has 500 holdings, 510. This is the S&P. That's all that is. So Dendrium, Queen, yeah, it's just, XPEV, trade it. Don't own it. If you want to own a car company that's making money. Own a car company that's not controlled by the Communist Party. That's the simple thing. And James, thanks. Drinking game at 9 a.m. I don't know what kind of drinking game you're doing, but kudos to you. Let's see. Charlie from Facebook wants me to look at SoundHound, not SUOUN. SoundHound is an AI company. It has been getting a lot of hype. And here's an article that I'll include in the newsletter. Artificial intelligence stocks were largely higher Monday, led by games in C3 and SoundHound. You can look at this. SoundHound, trade it. This is a company that's not making money. They have a ton of backers. So I don't think you'll get extremely diluted right now. They've got cash on hand of 39 cents. You might get diluted here, to be honest with you. Let's see. What's 246 million times 0.39?
The answer is 95,940,000.
So you have $95 million? Oh, guess what? You're losing $99 million? You're going to get diluted. Something's going to happen. Year to date, you're up 171%. This is hype. Doesn't mean that it doesn't have value. I don't know anything about the company, but it's hype. And when I see a profitability of F, when I see Wall Street says it's a strong buy, the reason is their price target. Their price target was $4.43. Everybody says it's a strong buy at $4.40. It's trading at $6.84. So understand, it's hype. It's gone into this hype. You have 35% downside to where Wall Street analysts have brought it down. Look at that price target. Trade it. If you want to hold this and you think it's worth some money, take it and run. But I don't think this is worth sitting back in a company that is losing $99 million and has $95 million in cash. I don't think it's worth sitting back and not trading it. I don't think that's worthwhile. Sam Norris, hey, could you mind taking a look at PNQI? It's a NASDAQ Internet ETF. It's up almost 700% all time and 50.94% in the last year. Currently, it's up 8.46% year to date. Looks interesting. as I made a long-term play. I really like the top 10 holdings. I know you know more about ETFs than me. The negative for me would be it's only 1.87% off the 52 high. Would you like to look at it? So I did this. I said, let me take a look at the comparison. I mean, here's the ETFs that I like. QQQ and XLK. Those have very similar. I looked at the holdings of PNQI, and it has super similar. Now, here's the thing. You look at PNQ, it has an expense ratio of 0.60. Go back and look at the expense ratio where you lose. Let me see. Oh, here it is. Fees. Loss to fees. So you're 0.6. Here, look at the three of them, okay? 0.6, 0.2. XLK is 0.09. Look at that. 0.09, okay, represents this. 10 years of investing, your annual fee, the percentage of the annual fee. Look at how much you lose. You lose next to nothing. Now, with PNQI at 0.6, you're up in this neighborhood, 0.6, 0.05, 0.6. I'd say you're in this between here. I mean, look at the 30-year at 1%. You lose 39%. You lose 39% of your actual investment. So in my mind, if you can find a low-cost ETF, remember, ETFs are not necessarily to be traded. These ETFs are to be bought and held. These are supposed to grow for you. So understand the expenses matter because you're going to sit there and wait for them. Assets under management, it's $820 million. Why would you do that for more expense? And I looked at it, the turnover ratio. If you go over here and you look at PNIQI, okay? PNQI right here. We're going to go over here and we're going to look at down here in Seeking Alpha. And we're going to look at fund details. No, we're going to look at peers, the risk, okay? I think it's risk. It'll pull up here. But come on, go down here. The turnover, 21%. Okay, that seems like a lot, but let's go over to QQQ. Let's look at QQQ and the turnover. Submit an article on TQQQ. The risk turnover is 22% in QQQ. So you can take a look at PNQI. If you're stuck and that's your only investment, I'd say but I'll include the two. I think it's XLK in my mind. I think that's the one you want. But if you want exposure to more stocks, you look at QQQ. And it's the fees. Bullish bites. Let me look at this picture. Glad to hear you're going on a trip up north before the podcast pauses. I was hoping you could look at NTRA. During the next episode. Natera does non-invasive cancer screening plus a bunch of other non-invasive genetic testing. Super popular stock in Silicon Valley. They had their own presentation during the JP Morgan's Biotech Conference in January. Seeking Alpha likes the stock. It's not a pump and up. A few hedge funds in California have had this in their small growth holdings. So bullish bites, you guys are awesome. I mean, you guys really know your stuff. NTRA, I told them, they said, hey, there's going to be insurance coverage covering this because it's preventive. I told them I am not in the healthcare space. Part of the reason I'm not in the healthcare space is because insurance companies have no incentive for prevention. Their entire incentive is for just covering what they can, what they legally are required to. Again, understand insurance makes money by holding costs down. That doesn't mean, hey, everybody gets a screening. This is what the Affordable Care Act was supposed to do. It's supposed to basically be preventive medicine instead of insurance being reactive medicine. And we in this country are 100% reactive medicine. So I don't think that a cancer pre-diagnosis company, it's not my thing because I don't know if the government's going to say, hey, you're required to cover this. The insurance companies could say, just like they're trying to do with the GLP-1 drugs, they're trying to say, hey, we shouldn't have to cover this because of the cost. And the cost is too high. That's what they're saying. Even though it's been shown in the long run, they're going to save money. They're going to save money because they don't have to pay for the diabetes care. So again, take a look at it. It looks like it's a buy. They love it. I know nothing else about this one. NTRA, let's look at this. if we look at this in seeking out, I mean, they're not making money. They're losing $499 million. They have cash on hand. It's about $700 million. So they have about 2 years of cash on hand. I can't argue with the stock being a good one. It is good, but I just don't know too much about it that I can give you guys. You guys know way more than I do about this stock than I could ever give. So, I'm not going to take a look at the chart. You guys know charting way better than I do. I can't argue with it. It's been a good stock. It's just not my space. Skater for Life wants me to look at Tesla. I told you about Tesla. In my mind, Tesla is kind of a hold until you get the monthly numbers. Until you get the monthly deliveries, I just think Tesla is a hold. Oh, and my Seeking Alpha, my TrendSpider. I got to re-sign into TrendSpider. But I do think that Tesla is a hold. And we'll look at the chart. I know it had a really good day yesterday. Tesla here. We're going to go into the 4-hour algorithm so we can take a look at that. And just so you guys know, the 4-hour algorithm for me is a comfort level. And it's the way, see, it's covering that gap. You got the gap up to 206. I mean, you kind of covered it in this morning. You got to 205. Didn't quite get there. But you're above the 9-day. The 187, great play. If the algorithm got you in and you got it, if you have my algorithm, you're making 100% in 2 years on Tesla. In 24 months, you had 24 positions, 1 trade per month. Your average win, 17%. That's the way to play Tesla. You don't own Tesla like this. You trade it. Tesla right now is an absolute trade. I have the car. Great experience. I loved my experience with Tesla. I loved my experience with Carvana. Not buying into either company. Great experience. I think they have a future. I think they're doing well. I'll wait. Thanks. I'll wait. Shep, so are you done with SMCI? Apple feels like money. That's been doing nothing for me for like a year. SMCI, I went over SMCI. It's now down at 825. Yeah, in the market. It's following that trend. Just like I showed you in TrendSpider. TrendSpider nailed it with that one. Now, Apple, on the other hand, Apple's been dead weight for a year. Let's take a look at the long-term chart. We'll go for a weekly. I mean, it has 100%. Here is July 2023. Let's go back. Let's look. If we go back to last year, at this time, the end of February 27th, you were trading opened at 147. So we'll go down to 147. This is your line, 147. So that's where you were, 2023. So are you up? Yeah. I mean, for a year, it's not like you haven't made money. This has been a stock that's made you money. I mean, if you go from 147 down here up to the stock price today, I mean, are you bitching about a 21% gain in 1 year? Hell no. I mean, that is an unbelievable gain. Are you bitching that you're now down at 180 and 170 when you were at 200 while the stock market is ripping? Maybe. In my mind, long-term game. I mean, I'm hitting singles, not home runs. With Apple, I'm hitting singles, not home runs. Every now and then, it's a home run. You can invest differently. But for me, here's an article, by the way, on Supermicro Computer. Rally is likely to resume. So, Shep, if you want to trade Supermicro, this is a great article for you. Has fundamental analysis, has all the revenue, has everything that you need to know. I agree with this. I don't think that the rally is over. I'm just looking at a settlement period. So I'm not done with SMCI. I'm just looking at a settlement period. Let's see. Hey, Gary, I love the pod. I know you're not a biotech guy. In fact, that's precisely why I'm asking. I'm good on the fundamentals, but can you look at ADMA chart? ADMA. Let's look. Hold on, my dog's crying. She wasn't crying. Fucker was snoring. Okay. ADMA. This is ADM Biologics. So fundamental-wise, I'm not even going to look at it. Algorithm has you in. I mean, this has been a stock that has done really well. The algorithm makes you 76%, but buying and holding 24 months ago, you're up 236%. What do you want me to say? I mean, it's a good-looking chart. If you know the fundamentals and you think we're getting back here, it looks like the 200-day starting moving. The 50-day, you had a golden cross here. Let's see where you were trading at when the golden cross happened. You were at $3 and you had the golden cross and you're up 53% since that golden cross. So, I mean, you've had some chop in between and you could have made some money in between just using the weekly chart. But you have confirmation. The MACD, I mean, the RSI, it's 75 on a weekly chart. It's at 75. You know fundamentals. So if you get back to the $6 one, great. But I do think that this one in particular, I think it's oversold. So William, hopefully that's it. Let's go over some scans. CAT, BULZ has a cross up. And when I talk about cross ups, I'm talking about entries in my 4-hour algorithm. So if you look at the scans at the end of the newsletter every day, that is my 4-hour algorithm saying, hey, it's a buy. It's a buy. If you want to know the price, then you get TrendSpider, get my algorithm, or ask me to do a chart on it. It's as simple as that. If you see one day in the newsletter, oh my God, BULZ, it's a triple levered ETF on FANG and it has a buy. What's the price of the buy? Well, it's 132.07. Simple as that. What's the buy on CAT? CAT has been an enormous winner for me. What's the buy-in at CAT? Well, the buy-in on CAT was 288. But this is another move for another day. Look at that. You got divergence here where the stock price is going up, the MACD is going down. That's a good thing. I mean, that's a really good thing for the stock price. Big move. We have a cross up on Mara. Mara at 16, that was the buy, but it's going for another move. You're up 7% at 31. Put your stop losses in. This will go back under 30. We have Oracle with a cross up. I just read an article the other day. Is Oracle undervalued? I think so. 111.53. You're playing with this 200-day. From a long-term standpoint, you've gone nowhere with Oracle ever since that huge earnings where it popped up here to 127. 127 was the high. You'll get back there. Oracle, good company, good product, good earnings, good management. Monster Beverage. We talked about Okta before earnings. Okta had a cross up. Monster Beverage, MNST, right before earnings, $55. You could get back here to $57. You could get back to the $60 range. If they have good earnings, could happen. I mean, the MACD's kind of coiled up there. You've got your Bollinger Band cinched up. You got your RSI in no man's land at 49. I mean, this is a coin flip for me. From a chart standpoint, this is a coin flip. So go to the fundamentals and check it out. If you're interested in any of the things that I talked about, again, the TrendSpider algorithm, it is an unbelievable tool for me. It is my go-to. It is number one. If you want to know the tools that I use, then go to the newsletter and you just go to yesterday's newsletter. It's titled the 226 Pod. And it's got the 4 tools that I really recommend. There's TrendSpider. There's Seeking Alpha Premium. There's Alpha Picks, and there's Webull. TrendSpider, if you're not into technical charting, find yourself a chart for free. Understand charting first. Do a little research. If you want the education program, sign up for my newsletter. It's $135. I'm going to raise the price once I start doing live trading, but you're locked in at $135 for the year. Or if you just want to get a month and read the education portion, it's $15. It's a one-stop shop. You can see everything that I do as far as technical trading in TrendSpider. I outline it in that education center. Now, Seeking Alpha Premium, I don't care if this is your first time. I don't care if this is your 100th time listening. Seeking Alpha Premium to me is the creme de la creme of one-stop shop. Yes, you can still use your FinViz. If you have a small portfolio and you can't swing the $189, use FinViz. The free tools were good enough for me. The free tools that exist today are far better than any tool I had trading in the 2000s. Yeah. So don't think that I'm forcing you to buy this stuff. I'm just telling you. Seeking Alpha Premium for me, for the amount of work that I do in managing my portfolio, it's a one-stop shop. Alpha Picks. If you're new to investing, this is the one that you want. It's $469. Personally, I'd probably pay the $189 and then read the stocks that you like. But Alpha Picks, if you want just 2 stocks a month where you purchase and it beats the S&P historically, Alpha Picks is your done. And then to pick the best mobile app to trade in, and part of what I'm going to probably do on the live trading, I'm probably going to sell out of my entire Webull portfolio and just start from zero. I'm going to do that at some point in time. It's gotten a little out of whack. I don't have a lot of cash in there. I've got a lot of stocks that I just need to dump out of. I don't do a great job of managing that portfolio. I manage my big portfolio, but I don't do a very good job of managing that portfolio. But yeah, Alpha Picks, Webull, Seeking Alpha Premium, TrendSpider. Those are the 3 tools. And you can find them at the link tree, linktr.ee/dailystockpick. And they're the top 4 links here. The 5th one is the newsletter. So, and you have all the socials up here. You have access to me. Not tomorrow and not on Thursday, but I will try and do whatever I can on tomorrow and Thursday. But sit there, wait for Friday's show. I'll be back. If you have any questions, hit me up on the Facebook group. Hit me up, reply to the newsletter. That goes to my email address. Do whatever you need to do to get in contact with me. But again, try and support the podcast. And just by signing up for the free newsletter, you are supporting the podcast. If you made some money in SMCI or any of the stocks that I've suggested, you can give me with Venmo, PayPal, Cash App, $1. Just tell me that you made some money. Nice $1 is always appreciated. If it's bigger, maybe I'll have an episode dedicated to you, like I did with Brandon, like I probably would do with others. The live trading session, by the way, I am leaning towards an interactive session. So I'm leaning towards Zoom, where maybe, if somebody wanted to come on camera, wanted to kind of say some stuff, because it's for paid newsletter subscribers, I'll probably do something like that. I just want to make sure that I can control it and blah, blah, blah. It doesn't get out of hand. So if you have any questions, hit me up. Okay, take care. Bye. Let me go and look at your comments. T-shirts. Wah, wah. Good morning. Happy birthday, mama. Yay. AMR is in Alpha Picks. Good. AMR is a good one. That one's been going crazy. Copilot, yeah. I'm in Microsoft stock. Good morning, Pavan. Morning, Scott. What do you think about VMEO? What the hell is VMEO? Oh, Vimeo. It's trash. When's the last time I used Vimeo? I mean, it's absolute trash. I don't know anything about it, but I thought it was Vimeo. But I can't imagine it's good. I mean, it's range bound. The latest analyst on February 22nd said it's range bound. It does. I mean, 1 year it's up 18%. Kudos. The valuation is crazy bad. Let's see, VM. When's the last? I mean, it's got an income of $21 million. That's shocking to me. Forward PE is 162. Why do you want to invest in a company like that? I mean, honest to God, I'd rather just go with Google. Is somebody buying Vimeo? That's the only chance you have in my mind of this stock being a good one. Downgrade from Jefferies, $7 to $4. You're trading at $4.23. Downgrade. 2 years ago, Piper Sandler. Insider buy on March 1st of last year, I guess, or maybe 2 years ago at $377. I don't like it. Don't like it at all. Sounds always running. CLEH reports February 29th says, yeah, that's Celsius. Looking at TXT. What the hell is TXT? Is that Textron, yeah. P looks decent. Year to date it's up 8%. 1 year it's up 18%. Income $921 million. Nothing wrong with it. Average price target 93. You're trading at 87. Not a huge upside. Most recent, UBS said sell at 73. Boy, were they wrong. I mean, back in October, they said sell at 73. Boy, were they wrong. I mean, that shows you what the monkeys think. Let's see, insiders. They're selling at big lots. I mean, this dude options exercised and then sold out at $4 million. President on February 15th sold $20 million at 86. So, 25 million. Sorry, he sold 25 million. So, I mean, it's up to you. It doesn't look horrible to me, but yeah. Fabulous 4. Yeah, I mean, it's down. There's definitely ones that you want to add to while they dip down. There's some you just want to hold on to. I don't think you trim them. I think Tesla is probably the only one that I think I would be super, super nervous about. Sentinel-1 is S. Yeah, it's not making money. I mean, it's a software company. So, it's expensive. Probably best for him to just forget about that one. I mean, if you're thinking Sentinel-1, I think this was one that, if I remember correctly, they had horrible earnings. Or maybe it was good earnings. I don't know. Ran up into here. But they gapped down here. Oh, is this the cybersecurity company? Information technology. Let's see. I think it's cybersecurity. Yeah. Yeah, cybersecurity provider. S. Did he do 1 word or 2 words? Let's see. Yeah, he did 2 words. Not my fault, Brady. MSOX. Man. This is a levered ETF. I don't know what it's levered against. Oh, it's cannabis. Yeah, it's cannabis. Stay out of it. That's one of your crazy ones, Brandon. Compass Group. Oh, thanks, Francie. Compass Group. And then I got to go. Because I got to still pack. CMPGF? I don't know. Nobody covers it. 19% over 1 year. It's pretty good. PE of 30. I mean, that's trailing 12 months. Earnings per share trailing 12 months. Dividend rate, 54 cents. Yield is 1.96. Looks okay. I mean, it's got everybody saying sell here on Wednesday, September 20th. Let's see. September 20th, it was trading around $26. You're $27.79. Nothing crazy. Okay.